Today is Friday, 5th of June, 7:24 in the morning, so pre-market open, looking at last night's close, and as usual, we're looking at the November new crop wheat price, UK. We've got to start with the monthly chart as usual, and we found support here at the 120 level, which was the high at the end of 2009, and we've got this big green candle here, and we're coming up to test the 5-month monthly average at the present moment. Closed last night 125.75, seeing a rise in the RSI. We just popped straight down to the daily chart because we've got quite a bit of work to do on here. Basically, where are we at the moment? Right, let's start. We've seen this falling market since January. Okay, we can count the waves down. We've seen a low, we've seen a high. We came down to test the low at the end of September, and the market's shown us that it didn't want to break below it. Clearly, it had quite a few tests here. We saw a divergence on the RSI, and it's shown us definitely that that is sort of a line in the sand, 120, right? So during May was the testing month. It came up. We had this big rise up, which we had this big engulfing candle here, and it came up to test 126, which happened to be, excuse me, our good old 6-day moving average, which was right to the T, and at the moment it stands at 125.34, and obviously fell back down to retest the support here at 120. So we've seen a failure, we've seen a break up, and we've seen a retest. So that is sort of solid, line in the sand, cast iron. You know, you can put stops below it, and it's showing that it doesn't want to go. In the process of doing that, it created a low. So basically, we've got a nice start of a possible wave upwards, move upwards for the market. So as we did here back in October last year, you move one, we can start putting that in place, and it's a move of £9 a tonne. So basically, we can count this back to wave 2. Last night's close was giving us a buy signal on a clearly a close above the 60-day moving average. So basically, we've got a wave 3 target of 134, and then ultimately our wave 5 target comes in at 150, which is the highs of December of last year. Obviously, markets don't go straight up, so obviously in between that, I put in pink here the Fibonacci retracements. So we've got the first one coming in here at 133. So we could see some, sorry, no, I've got the first one coming in here at 126. I'll get that right, 129, and then 133. So basically, we could see some reaction off that. So basically, you know, the market will do its usual up, down, up, down, up, down. Basically, this wave count will be in place until we take out the bottom of wave 2, or we see, you know, a sort of really you know, good old close, and below this sort of high of 1, and obviously this swing low here, you can see 124. So yeah, it's got room for movement. We've got a move upwards, a positive move up in the volumes, which is indicating that. We've got a break through the 50 line on the RSI. We can see here that was we had this move up here. That was in October of last year. So yeah, everything's in place. You know, looks interesting. 60-day moving average is going to be the key. Obviously, I like it to go up a bit today, and then possibly come back and test it, retest it again, and put on another small low here, sort of around this sort of swing low here, and then we see no reason why we shouldn't see a quick move up to sort of 134, the previous highs here at the end of March. But obviously, it's always nice when you've got a sort of a plan in place. We've got all key things coming together. The market's shown us, say, this 120 level is sort of giving us good support. You know, let's see how it plays out now. We've got the roadmap in place, so I'll put an update this time next week. Thanks for watching.